Time for a little chart attack, and it's apropos. As you know, crude spiked above 110 a barrel. That was just about 15, 20 minutes ago on possible refiner, or rather a pipeline issue in Saudi Arabia. It's still unconfirmed, but that's at least what people are talking about. So thankfully, we have one of the best oil forecasters in the world. He's still with us, Jason Schenker, president of Prestige Economics, and we're going to do a little chart attack on oil. Obviously, we have this headline, so bullish today, but you're actually bullish longer term. Why?
Well, there are a couple reasons. I mean, one, I think we look for the full year, we're going to see prices go higher. In the long run, you know, it's a demographics play. You know, you're looking at demand going up. You look at per capita consumption in the U.S. versus China. You look at consumption in Brazil. These places are all going to see their per capita consumption rise. In the longer run, the demand is going to rise a lot faster than the supply is going to be able to keep up. It's going to push prices up. But if we think about the next couple of years, I think maybe that's where we want to hit.
All right, so it's a structural issue.
Yeah.
Talk to us about the chart. I mean, is there a technical reason that would cause you to be bullish as well?
Well, I think right now there definitely are a couple reasons to be very bullish, and I think right now the big thing is to not be on the wrong side of the trade. I know the chart.
In other words, short.
Yeah. I think right now it's very dangerous to be short crude, and there are a couple of different reasons for this.
All right, so we've got two lines we can draw in here, two trend lines. One's the 30-day, kind of a short term.
Yep. That's
the yellow line. Then we've got the longer term trend line. That's the 90-day. We're above both of those. What's your interpretation of that?
Well, there are a couple things on here that are really important. The first thing is, if we look at the chart to the left part of the chart, you'd see where Libya kicked in. And as soon as that hits, you begin to break out above the 30 and the 90. These are two moving averages I've liked for a long time to give you signals as to where the price might be going. What you see here is after Libya, you had a physical disruption in supply. Saudi Arabia pledged and other OPEC members pledged to add more production to the world market to make up for the lost Libyan barrels, but it didn't matter, and the price went up and up and up.
Well, it went up, but then it came back down to 75 in September. So in other words, were you to take Iran out of the picture, you might get a spike, but then Saudi Arabia comes in maybe and makes up for it.
Well, that's true, but how many months does it take before the Saudi barrels can come in and replace the barrels from the third largest exporter in the world? Iran is only behind Saudi Arabia and Russia as the third largest exporter of crude in the world.
And another key point, a lot of people don't talk about this, much higher quality crude coming out of Iran than Saudi would be able to create given their max.